Hi everyone, welcome back. Today's presentation is presented by Amanda McElrath. I am an account manager from To The Rescue Bookkeeping. Feel free to check us out on our website, and you can also contact us by mailing address or phone number if you have any accounting or bookkeeping needs or questions. Today we're going to talk about reconciling and what it means to reconcile an account. According to Merriam-Webster Dictionary, the definition of reconcile has multiple definitions. It means to restore to friendship or harmony, to settle or resolve, to make consistent, to cause to submit to or accept something unpleasant, or what our real definition that you use in terms of accounting or bookkeeping is to check against another for accuracy, as in a financial account, or to account for. So why is it important to reconcile your accounts? Well, first off, it is just good accounting practice to reconcile your general ledger or your financial accounts on a regular basis. It helps for you to know what your financial health is, and it's also useful for preparing financial statements and for audits that may come up. Your financial statements that you should be checking on a regular basis would be like your profit and loss, your balance sheet, and your cash flow. So what do we do? Well, how we reconcile an account is after all the transactions have been updated to your bank and credit card accounts or your loan accounts to QuickBooks, and this can either be done by a bank feed or through a manual entry. We then compare those financial statements with what is in QuickBooks. So what exactly are we looking for when we reconcile an account? Well, first off, we look to make sure the beginning balance matches the bank statement with the balance that is in QuickBooks. And then we then enter the ending balance, and our goal is at the end of reconciling, the ending balance will match in QuickBooks as it does on your bank statement. We're then looking for discrepancies to see if there's anything missing from the QuickBooks account to your bank statement, or if something's entered incorrectly. We're looking for duplicate entries. This happens quite a bit where people will download automatically through their bank feed the transactions, but then they'll go in and they'll enter a receipt and they don't realize that they've entered two transactions. So one of those will need to be voided in order to bring those accounts back to being in balance. We also are looking for uncashed checks, and why are those checks uncashed? Did the person receive them? Did they not receive them? So on and so forth. We're also looking for incorrect entries. So if you're manually entering, it's possible, say you had a check written out to John Doe in the amount of $561.51. Maybe you transposed one of those numbers and had it as 15 cents. Well, then it wouldn't reconcile. So you're looking for those differences and making those corrections. You're also looking for unusual transactions that are happening within the account. It's a way to catch to see if somebody's stealing money from you, an employee, or if somebody's laundering money. And we are also checking for reversals and adjustments that they have been made correctly and properly in QuickBooks. And that's all I have for you today on what it means to reconcile an account. If you have any questions, comments, or concerns, feel free to contact us today at To The Rescue Bookkeeping. Our address and phone number is listed there. You can also find us on our website at www.totherescuebookkeeping.com. Thanks and have a wonderful day.